that the government is mulling some kind of relief for the salaried Indian class in the budget, but we yet do not know if that is going to take a proper shape. Now, the government, as per my sources, is definitely wanting to do and bring some kind of tweaks and moderations when it comes to the capital gains tax and the personal income tax, but they have not yet decided the quantum of modifications, and they've not yet decided if this budget is going to be the right time to introduce it. Now, government wants to do away with the complexities in the tax regime, and that is why one of the reasons they are contemplating in changing and bringing simplicity in the tax slabs, in the periods, and distinguishing the asset classes. There's one thing for sure, that the government wants people to move to the new regime when it comes to personal income tax, and for that they may bring about some kind of provisions, relief or exemptions in this budget. But my sources say me expect nothing very big this year, while the plan is definitely to bring relief to the middle class and relief to the consumers because of the inflation. I don't think we should expect some major changes or major relief when it comes to the salaried taxpayers.
Indian markets snapped a 3-day losing streak today, largely on the back of bargain buying in stocks from sectors such as information technology and oil, which were beaten down on Monday. The depreciation of the Indian rupee against the dollar also aided information technology companies, as this is seen supporting their margins. The Sensex ended 274 points higher at 61,419. The Nifty was up 84 points today. Top gainers included IndusInd Bank, NTPC, JSW Steel, HDFC Life and Ultratech Cement. The laggards included BPCL, Nestle, Bharti Airtel, Power Grid and Kotak Mahindra Bank. Despite high valuations, top investor Raamdeo Agarwal still sees an upside in the stock markets. In an exclusive conversation with Business Today TV, the market veteran said it was the retail investor driving the markets.
Joined by Mr. Raamdeo Agarwal. Mr. Agarwal, if I could start by asking, domestic equities look set to hit fresh record highs. What is your outlook on the current market scenario and what do you look forward to?
Yeah, so clearly, I mean, the indices are telling you that we are most resilient, not only economy, but also in the stock market is clearly visible. And this is the power of retail. The retail will not allow the market to go down, and FIIs, they are watching retail. So they are scared of retail power. So, and the country's own is standing. So I think they will be there'll be some time coming, sometime they'll be going. But I think the downside is limited, upside is pretty good. That's what I can say.
So would you call for a caution in the market investing?
Investing is always cautious approach. I mean, you cannot be reckless. You know, I mean, I'm not about speculating. In investing, you have to be cautious. But if the market helps you, market is giving you tailwind for people to make money. So let's see, I mean, the next 4-5 years.
So in 2022, India outperformed all its global peers. Do you see this phenomenon going forward?
I mean, it's very difficult to speculate anything and forecast about the economy and all. In any case, I'm not an economist. I'm just a stock picker and analyst. So we go about, looking at the markets are reasonably priced. It's not cheap for sure. Reasonably priced, and I would say it is a little expensive by my own experience. My problem is I have seen 40 years of the market. The younger kids who are actually ruling the market, they have not seen a very underpriced markets. So for me, it's kind of a bit pricey, but I think the market itself will play out and markets will remain firm.
So we're very close to the budget. Do you think from now till the budget, what would be the market trigger?
No, I mean, what you have seen, markets are firm. Markets will remain firm. And see, what is going to happen to earnings? Don't bother about anything. Earnings this quarter was a bit lower than what we thought, more like 850 rupees types. But my analysts are saying that earnings are going to be on track to deliver 830, 835, and next year 950, 970 and things like that. So if that outlook remains intact, markets are going to be in good shape.
Another day, another anchor investor selling shares in Nykaa. Today it was Lighthouse, which sold 18 million shares in FSN e-commerce in a block deal. The investor held 2.04% stake or 56.5 million shares in the company as on 12th of November. It had already disposed of 30 million shares last week, leaving it with just about 8 million shares. Lighthouse is just the latest to sell its shares. Investors like TPG Capital and Sengati have also offloaded shares in the company after the lock-in period for anchor investors ended last week. Sakshi, Batra Batra spoke to Shyam Shekhar of I Thought Advisories about the sell-off and about the timing of the bonus issue coinciding with the end of the lock-in period.
Are these pre-IPO investors really selling, when they're selling after this pre-IPO lock-in, are they really taking a hit on the investments? Because the stock price has already crashed about 50-60%. Or had they entered at a much lower price and they're still sitting on profits, and no matter at what price do they really sell, they're still going to make profits?
If I'm going to second guess their mindset, I'm reminded of a very famous Zurich axiom from the book by Max Gunther. When your ship sinks, don't pray, jump. That seems to be the mindset of all these investors. They are not looking at the valuation. They are looking at how each of them can get out before the others come to sell. It's as simple as that.
Right. Also, Mr. Shekhar, you've written extensively about the problems that you actually saw with Nykaa's bonus issue that we saw earlier this month. Now, there is an argument that the management was just intelligently avoiding a fire sale, as they intentionally coincided the date of the bonus issue with the date of the lock-in period ending. Do you really believe so in that argument?
I leave it to the wisdom of regulators, public watchers, media, and market participants. To me, it would be too much of a coincidence. I mean, to believe that these promoters didn't even read what they were doing is rich. It's very, very creative and rich.
Okay. And you also said that getting a bonus share has perhaps been, in a way, negative for the existing investors. So could you explain that, especially when you talk about the tax outgo that you expect from the existing investors that they have to be prepared for now?
My primary concern is the investor who bought these shares in the listing. Let us talk for him, about him. Let us assume that you bought these shares at those elevated valuations on listing. Now, if you see the fortunes of the company are not what they looked at or looked like during the listing, you want to get out. So you want to sell now. If you want to sell now, you're going to make losses all the way on the original shares, or you may make a small profit depending on what price you bought it. But on the entire bonus share, you're going to make a technical loss, but you have to pay taxes if you sell. Imagine making a real loss and paying short-term capital gain. I think that this is like putting the investors who participated in listing and believed the perception that this company was giving to them blindly, bet on the promoter's entrepreneurial skills and her ability to deliver to them. These investors are being put in a gas chamber. I have not seen something like this in many, many, many years of my presence in the stock market, especially in an IPO. Our IPO system had refined itself tremendously over the years. It's very sad to see what we're seeing today. See, because you have reduced the public float to ensure that retail investors come in later and not in the IPO. So you have actually given a lot of shares to anchor investors and early stage investors, pre-IPO investors, reduce the public float, manage the public float in such a way that those who want to buy on listing will have to buy from the QIBs 1 month later. And all these people have bet on the company and bought these shares at a significant premium to the IPO price.
True.
And today, if they have lost their faith in the company, they'll have to sell these shares. They don't have much of a choice because the guys who have bought the shares much cheaper than them are rushing to the exit gate. So that fear is going to rub off on retail also eventually, unless the company does something miraculous to restore confidence. So if the confidence is going down and the retail investor is going to come and sell, he's going to pay taxes on those bonus shares, on which he made a loss, which is, in my opinion, not fair.
Absolutely. So in that case, what exactly is a market regulator's attitude, SEBI's attitude to such cases? And also, are these really considered as what you earlier pointed out, a corporate governance issue as well?
I think this is clearly a corporate governance issue, and I am sure that the right response will come from regulators. It is still early days. I am sure that the right response will come. So I would not jump the gun on that. But I definitely hold the board and the independent directors accountable for this mess.
Right.
I mean, if I'm sitting on a board, I would obviously know the consequences of a decision which I'm making. Otherwise, I shouldn't go on a board of a company.
Right. So do you
And if I
believe
cannot-
that somebody from the board at least should have raised an alarm on this bonus issue?
Well, anybody with basic knowledge of directorial duties would not have allowed this. Or anybody who respects that role adequately would not have allowed this. That is how I would say it.
But have you ever noticed any such instance with other recently listed companies, or is it an issue particularly with Nykaa?
I think that companies are misusing bonus and stock splits to manipulate public float. This is a serious warning bell. This is not the first instance. There have been other instances also. And companies are misusing bonus and stock splits to dissuade investors from selling. And that effectively is creating over-reliance on management of public float. And people are relying more and more on this way of managing valuation by managing public float. And this in turn makes perception and the management of perception a lesser priority in the eyes of managements and boards. I think that is the serious signal or the serious warning that I am getting from these kind of actions.
Let's take a very quick break. When we return, a special conversation with the company which is giving stiff competition to Twitter in India and Brazil.
Sara Ali Khan took to social media to share these selfies from the beach, and it also features Varun Dhawan. While Varun showed off his toned abs, Sara rocked a bright red bikini in the pictures. Captioning the post, she wrote and we quote, "See you soon." Sara and Varun are currently in Goa to attend the 53rd edition of the International Film Festival of India. Meanwhile, on work front, Sara was last seen in Anand El Rai's Atrangi Re alongside Akshay Kumar and Dhanush.
सीधे राजा राम की डायनेस्टी से हैं। स्वयंवर होता है हमारे यहाँ। हम नहीं मानते जबरदस्ती के साथ।
As far as Sara's upcoming projects are concerned, she has Lakshman Otekar's Next in her kitty. The film also stars Vicky Kaushal in lead role. Varun Dhawan, on the other hand, is gearing up for the release of his upcoming film Bhediya, co-starring Kriti Sanon. Directed by Amar Kaushik, the horror comedy is all set to hit cinemas on November 25th. The 9-day gala, which started on November 20th, will feature 280 films from 79 countries. The event, which kick-started with the Austrian film Alma and Oscar, will have Perfect Number as the closing film. It also honoured several film personalities, including megastar Chiranjeevi, who received Indian Film Personality of the Year at the opening ceremony of the International Film Festival of India. The announcement was made by Union Minister of Information and Broadcasting Anurag Thakur. Taking to social media, the Union Minister wrote, "Shri Chiranjeevi ji has had an illustrious career spanning almost 4 decades, with over 150 films as an actor, dancer and producer. He is immensely popular in Telugu cinema, with incredible performances touching hearts. Congratulations, Chiranjeevi." On work front, Chiranjeevi was last seen in Godfather, and Salman Khan did a cameo in the film.
Welcome back. After a blockbuster year for tech in 2021, layoffs are finally here. Companies like Netflix, Amazon, Facebook and Twitter have slashed jobs this year, and many in the tech world are bracing for a chilly tech winter. But what will the next few months look like for big tech, which is in the eye of the storm? BT's technology editor Ayush Elavadi caught up with Qualcomm's Don McGuire at the Snapdragon Summit in Hawaii. Here's what he had to say.
Of course, there's so much happening in the tech world, layoffs galore at Twitter and Meta. As a tech leader yourself, what is your broader view on what's happening in the tech world, and what's Qualcomm's view on this as well?
Sure. I mean, the macroeconomic environment is tough right now. We see the environment that we're in and the impact that it's having as cyclical. And it really comes down to supply and demand and inventory. As the pandemic set in, there was lots of people that needed to upgrade their device ecosystem to stay connected to family and friends and work and school. So that drove a massive demand increase across different product categories. Unfortunately, there wasn't the supply to be able to handle that demand. So we had this supply issue.
Right.
But as things started to ease and we started to come out of the pandemic, the supply chain issues started to ease, but also the demand started to slow. But the inflection point was missed by the value chain. So our customers continued to buy, right? Because they didn't want to get caught into a supply chain issue again. But the demand curve had started to slow, so inventory started to build. And then we enter, Q4 of this year, where you've got high levels of inventory, no supply chain issues, demand weakening in goods, demand increasing in services, in travel and experiences, and there's discretionary spend shift.
Right.
So we have to correct this. This all has to be corrected. Inventory has to be kind of flushed through the value chain. And we think that's a couple quarters. We think we said in our earnings call, over 50% will probably happen in this next quarter, and then the rest in the subsequent quarter. And then we get to a normal supply chain balance, and then we can start to grow again. And I think our ecosystem starts to grow again, our customers start to grow again. So it's about powering through, but it's also about being prudent and diligent in this kind of environment. How do you manage spend? And how do you manage your capital and your resources so that you're in a position of strength on the other side? And I think each company has to look at that differently. Obviously, we are looking at spend. We are looking at things like travel. We are looking at hiring critical positions only, and we are looking at balancing that spend with demand and revenue in the short term, but without taking our eye off the ball for the long term, because you have to invest to grow so that you come out on the other side in a position of strength.
And here's what else is making news in the corporate world today. Keynes Technology was listed at a huge premium of 33% on its issue price of 587 rupees. The share rose to a high of 786 before closing the day at 690. Proceeds from the issue will be used to repay debt, fund capital expenditure, as well as working capital requirements. Japanese beverages giant Kirin has 570 crore rupees in B9 Beverages, the company which owns the Bira 91 beer brand. With this, Kirin's stake in Bira has doubled to 20%. The money will be used to commission new breweries and expand current production facilities. Amazon Web Services has inaugurated its second infrastructure region in Asia Pacific in Hyderabad. The new Hyderabad center has been set up at a cost of $4.4 billion and will create 48,000 jobs in the next few years. The Australian Parliament has ratified the trade deal with India, paving way for the India-Australia Economic Cooperation and Trade Agreement to be implemented in the next few days. The FTA will provide duty-free access to the Australian market for over 6,000 Indian product categories for 5 years. 85% of Australia's exports will get zero-duty access to the Indian market. India aims double its trade with Australia to $50 billion in the next 5 years from $25 billion in 21-22.
The IT industry has shared with our ministry that if this tax goes away, which has now been approved by Parliament, Australian Parliament, they can see a quantum jump in their business with Australia. I'm sure the IT industry will be immensely pleased with this very big achievement that has happened today. Another issue that I would like to share with you particularly, for the first time we have got visas for Indian chefs and our yoga instructors. And we have also got a commitment that every child who goes from India to study in Australia will get an opportunity to work there, depending on the quality of the level of education.
Even as Gujarat is in the midst of pole fever, Business Today TV's associate editor Chetan Bhutani visited the epicenter of the White Revolution in India. Here's an exclusive conversation with Amul's Chief Operating Officer Jayan Mehta about rocketing milk prices, Amul's grand plans beyond the dairy space and the elections.
the core business of the organization is dairy because we deal with milk producers. But one big initiative now we have recently taken, and it will grow multifold, is our foray into organic. More and more Indians are now wanting to have products which are naturally produced without pesticides, fertilizers, and so on and so forth. And in India, there are producers already in this space. So there is a mandate from the government to work in this space so that we are able to give access of the market to these producers and give consumers good quality organic products at an affordable price. We will be setting up certifying labs for organics so that the farmers and the consumers are both assured of the quality. And we will build on this market by working with a large number of farmers from across the country. So you will see Amul coming out in this space. Apart from that, we already work with potato growers who are also our farmers in North Gujarat. We set up a big processing plant for potato, and we've been able to achieve the full capacities within the first 3 months of launch. So that is one category we are working.
Is there a plan to get into spices?
Not directly, but if we are working with the organic producers, that's what we are applying in, say, Sikkim, where there is cardamom or ginger, or in Northeast also we see a lot of other things, and in South also we see. So sooner or later we will have the organic spices also as a part of the organic product portfolio.
How is the company doing in terms of sales and marketing? I know for that fact you don't spend much on marketing, like literally 1%, but how is the turnover going? Last year you saw significant turnover. What about this year? What are the plans and how is the outlook looking like?
Our last year turnover growth was about 18%, and we achieved GCF balance sheet was about 46,500 crores, and Amul brand turnover was about 61,000 crore rupees. This year, in the first 7 months, our turnover growth is in the range of 28 to 30%. And that's what we are currently growing, and we will end the year with more than 25% growth. And that's what you can imagine. We've been growing at a CAGR of more than 16 to 18% over the last 10 years period.
Of course. Now coming back to the point that elections are coming into the state. What are your expectations from the government? Is there anything, any relief, any measure that you want for the dairy industry to come up?
The government, both at the center and the state, has been supportive of the cooperative movement. And you are aware that last year a Ministry of Cooperation was also formed. Prior to that, a separate Ministry of Animal Husbandry and Dairying was also carved out from the Agriculture Ministry. And the government is for the first time saying that we want to double the farmers' income. So earlier it was never articulated so well. So with all the initiatives, what the support we are getting in general for the agriculture sector as well as the cooperative sector has been pretty good. So, and we are hopeful that any government which works both at the center and state will continue to support the farmers in the way it has been done in the past.
And that's where we leave it on the show tonight. Thanks so much for watching.